What's good, wonderful people? Is your mentor Gamma Fixes Smart Wealth. Welcome to the beginner's guide of central banks and the back end operations of the Forex market. So essentially what this is going to be for you guys, it's like an in-depth institutional guide to how global currency infrastructures work based off of liquidity and interbank mechanics. So this guide explains the behind the scenes of the global foreign exchange market. It teaches you how monetary policies, interbank liquidity, settlement systems, reserve management, and forex interventions and marketing mechanics and all of that jazz. I know this sounds like alien language to you guys, but trust me, it's not that complicated. Once you understand the terminology, it's actually pretty simple. So without any further ado, let's get straight into it. Understanding the Forex market. What is the Forex market? Essentially, it is the largest financial market in the world where it trades about trillions of dollars every day. Guys, this is a lot of money circulating every day. And if you just target 1% of that, I mean, not even 1%, 0.0001%, that's enough to set you apart for the rest of your life, right? So, unlike the stock markets, the Forex is obviously it's a decentralized network and it operates through interbank um, exchanges, right? So, for example, the currencies are quoted in pairs for my favorite one, my personal favorite one is the euro versus the dollar, or we also call it euro USD, right? So what essentially this pair is showing us is it's showing us the relative strength of the euro hedged against what? The dollar. Meaning, let's say we get a monetary policy on the news saying that, I don't know, the Central Bank of Europe is going through rate cuts and X amount of jobs is going to get lost, right? So if there's less people working in the market, obviously that means they're trying to reduce expenses, which means prices are selling off. So we're going to expect the lower pricing of the euro USD. So meaning the euro is going to drop in value. Meanwhile, the dollar is going to rise in strength. So what effect does that have on euro USD? Hmm. We have a weak euro, but we have a strong dollar. That means euro USD needs to sell, right? And then vice versa, if we get strong monetary policies, if the euro is buying and let's say the dollar is weak, obviously we do the same, right? So that's essentially how it operates. And the central banks are the ones that influence the value of the currencies. Like I said, through what? Through their monetary policies and also liquidity operation, right? So I'll go in depth on a separate video on monetary policies and all of that jazz. But for now, this is just a brief introduction as to what to expect in the markets. But yeah, um, going on to the next point, what are the role of these central banks? Like we said, they the ones that show us the value of these currencies. They influence the values of these currencies, right? So they manage inflation, they manage financial stability, and they manage the currency strength, like I said. So how do they do this? They do this through interest rate changes, and they do this through currency evaluations. They intervene with volatility, and yeah, that's basically the role of the central banks in the forex market, right? So moving on to that monetary policy and currency valuation, like I said, when rates rise, foreign capital tends to flow into that currency. For example, on the news, like I said, if we get a headline that says the president of Europe says that there's going to be new jobs, there's new investments. Obviously, that's sounding nice to the investor, right? So investors will want to do what? They'll want to invest more into that currency, meaning there's a lot of volatility that is to be expected for that specific pair on the euro, right? So then there's different pairs we can trade. It's up to you on your preference what you want to trade. My personal favorite is Euro USD. For you people that, let's say, like trading the Japanese yen, you could pair euro versus the yen. For those that like, I don't know, the Swiss franc, you can pair the euro currency with the Swiss franc and yada 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 yada. And yeah, I don't want to go in too deep because it's still the first lesson. I'm just like introducing you guys to everything. And yeah. So the interbank Forex infrastructure, right? What does that mean? Okay, cool. Forex is the most traded between banks and financial institutions. Liquidity providers, they quote and bid ask prices to clients. Essentially, liquidity providers, they will quote and bid and ask prices to clients and counterparties. So they offer us opportunities in the market for us to get involved, right? So they do this through institutional systems like EBS, routers, Matching Connect, major dealers globally, retail brokers, of which are the middlemen between us being able to look at an investment, deposit our money, and being able to profit off of that live feed, right? So these brokers, what they do is they give us access through liquidity through different aggregate fees, right? So you don't need to know that terminology. This is all you need to understand for now, briefly. So yeah, let's dive straight into the charts. So now we're gonna dive into a concept called market structure. Essentially, market structure is how it's a set of codes at which the algorithm is gonna follow to either price um to input prices higher or lower on a particular pair, right? So there's different kind of trends, right? There's an uptrend, there's a downtrend, and there's a sideways trend. Another terminology that we can use is the bullish for a buy trend, meaning the market is going higher, and then bearish, which is a sell trend, meaning the market is pricing lower. And then obviously we have a sideways market, meaning the market is not going higher, it's not going lower, it's moving around the same price range, creating what we call a consolidation, right? So the first one that I want to explain is the buy trend. What determines a buy trend for us? So what we need to see are higher highs forming and higher lows, right? What does that look like? I'm about to show you now, right? Pay attention to this line chart that I'm going to draw for you guys. So let's say the market was moving high, leaves us with a high, it goes low. It trades higher than that high that we created, right? It doesn't go lower than this low that we created, trading into what? Essentially, whatever area in this market is, creating a higher low, and then doing what? Creating a higher high. So that for me is confirmation that the market is going higher. So let me price that for you so that it actually makes sense to you guys. So pay attention to these circles. So circle number one here, this is a higher high, right? And I'm gonna change that color to maybe black so you can see it, right? And then this is a higher low, right? Let me do it for that. This is a higher low. So HH means higher high, HL means higher low, right? So there's higher low, um, another higher low. I mean a lower high, sorry. Yeah, it's a higher low, sorry. Let me not confuse you too much. As you can see, boom. And that's how we determine a buy trend, right? We need to see higher highs and higher lows forming, and this is what it looks like for us, right? How would our sell trend look like? Well, that's easy. We just need to do the opposite of the buy trend, right? And I'm about to draft that up for you. Let me show you here. Okay. Sorry. In a sell trend, the market needs to move something like this. Needs to go low, leaves us with a low, creates a lower high, creates a lower low, lower high, and lower low, right? Let me draw that up for you so that it makes sense. There is your lower highs, right? Lower highs, right? And then we have lower lows, lower lows, all right? Um, Lower lows. So essentially, this for us is confirmation that we are in a what? We are in a sell trend. So this is the sell trend. Remember, we need to, what determines the market is selling? We need to see lower highs. We also need to see lower lows. And it's that simple, guys. And with the sideways market, I don't really want to teach you the sideways market because you're not going to be trading in the sideways market. But for the sake of just showing you what a sideways market looks like, it's going to look something like this, where the price is not going high or low. It's just remaining stagnant in one area, right? Something, so it's going to be something like this. We call it a consolidation, right? Where pay attention to this box. The market is struggling to move higher than the highs, and it's struggling to move lower than the lows. So it's just remaining in one mini consolidation, like we call it. So it's a sideways trend, consolidation, whichever makes sense to you. Sideways trend slash consolidation. And essentially, that's how we define trend, right? And please take a screenshot of this, or I'll take a screenshot of this and send it to you as well if the video doesn't make sense. But yeah, now let's dive straight into the chart and look for live examples. So let me go into a separate Euro USD chart without drawing so that I don't complicate you guys, right? If you pay attention to the top left-hand corner, right, we have something called change intervals. So unlike institutions, us retail traders, we have the privilege to move around between certain intervals, right? So starting from a monthly trend, going to the weekly trend, going to the daily trend, going to a 4 hour trend, 1 hour, 30 minutes, 15, 5, and essentially the lowest being 1 minute. So the lowest time interval you can trade is 1 minute. So essentially what these intervals show us is trading movement of how price is moving in a particular time period. So for example, this is the 24-hour period or 1 day period. So each of these blue and black candlesticks, um, each of these blue and black candlesticks represent the movement of price going higher or lower. So the colors don't have to be like mine. I just like it like this. For me, it's I can see the chart. It's more visible for me to see certain opportunities, right? So the green candlesticks essentially represent prices moving higher at a particular time interval, and then the black candlesticks show us prices going lower at certain intervals, right? So remember, as they're going higher and lower, they leave us with what? With highs and lows. Okay. What trend is this? Let's focus here for a sec. Um, in between, let's say, yeah, let me start here so that it's simple. In between these two red lines, what kind of trend is this? Obviously, the market is going lower. So for me, I would say that is a sell trend. And how do we confirm that we're in a sell trend? Let's check. Remember, we need to have lower highs, right? That's lower high number one. Um, Let me just copy this real quickly. This is lower high number two. Oops, over there. Let me try and make it smaller. Yeah, lower high number two. This is lower high number three. This is lower high number four. Uh, oh, sorry. This is lower high, right? What else do we need to confirm that we're in a sell trend? We need to see lower lows as well. So where's the first lower low? Here, right? So we have a lower low. We have another lower low, another lower low, and another, oh, sorry, another lower low. So paying attention to the diagram that I've just drawn, remember, this is how it moves. It's like one, it creates the high, lower high, go down to the lower low, we move up, creating a lower high, go down, creating a lower low, we create a lower high, create a lower low, lower high, lower low, and lower high, essentially, right? And this is what it looks like. Let me change the color and make this bigger so you can see. Maybe turn it into purple. Let me make it 4 times bigger, right? And that for me would determine what selling market in this current time period, right? Um, Here's a perfect example of a sideways market, right? Do we see any highs and lows forming? No, we are not trading higher than any high. We are not trading lower than any low. As you can see in this particular period, um, this for me would be the consolidation period because the market is not giving us any opportunity. It's stuck between one range. So I don't really like trading these markets. It's very risky. So I'd like to put my focus on either a selling trend or a buying trend. So you can see consolidation. Ooh, here's another perfect example for a buy trend, right? I'm just gonna pause for like 30 seconds or something, and I want you to point out um the buy trend. What determines a buy trend for you? Hey, I'm sure you didn't pause that video, but anyways, um, let's start here. We clearly have a low. We have the low, which creates the low, which creates a higher low, the higher low, right? Is this low higher than this one? Yes. Here's another higher low. Is this low? No, this is the same one. So we're in the higher low, which is here. Let's see. Is this low lower than this previous one? No, it's actually higher. So it's a higher low. So that's my first confirmation that we're in a buy trend. Where's the higher highs? So here's the high, marking it up as high as H, right? Where's the next high? That's higher than the current one that we are viewing. It's right here. And then we're going to label this one as higher high. Okay. Where's the next one? Higher high. Where is the next one? There we go. There's a higher high. Where's the next one? This high is higher than the next. So for me, this is enough confirmation to know that we are in a what? We are in a buy trend. So we have this, this, this. You see, so the market is not too complicated, guys. You just need to understand how the structure is and what confluence you need to look for, right? So essentially, that's the first lesson of the day. Your homework is to go through whatever Forex pair that you want, take screenshots. I want you to give me three screenshots of a selling market, examples of a selling market, and give me three screenshots of a buying market. But yeah, should you have any further questions, I am available to help you out. Don't be scared to wake me up or give me a call, whatever. I will gladly assist you guys. But yeah, that is the first lesson. I hope I did make sense. If I didn't, please do give feedback. We do need the feedback. And yeah, subscribe, like, comment so other fellow beginners can get this free source on how to be profitable. But yeah, that's it from your mentor, Fixes Smartwell, signing out. Stay tuned.